Okay, so uranium stocks continue to disappoint investors. The Sprott Uranium Miners ETF is down over 21% year to date. Look at that ugly chart. But guess what? The entire stock market looks hideous right now. This is the Russell 2000 index, down over 15% year to date, making the exact same pattern. It's not a coincidence they're correlated. It's a rock solid correlation for good reason. Well, we talk about interest rates a lot, but guess who else cares about interest rates? This is Donald Trump on April 17, 2025. The ECB is expected to cut interest rates for the 7th time, and yet too late Jerome Powell of the Fed, who was always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs too late. Should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. The U.S. government is desperate to get interest rates down. So just like uranium stocks, just like the real estate industry, just like growth technology, just like anyone borrowing money, the U.S. government needs those interest rates to come down because they're about to refinance trillions and trillions and trillions of dollars of their own debt in 2025. So again, why have uranium stocks done nothing in 3 years? The same reason the real estate market has done nothing for 3 years. It's because the 10-year bond yield or interest rates have been high for 3 years compared to back here, which were the good old days, right? That's when everything was pumping in 2021. So when we take a look at the federal funds rate, this is what Donald Trump wants to come down. He's desperate for it to come down. This is the Federal Reserve's interest rate. So look at where we are now and look at where we were back in 2020. What happened in 2020? We had a massive deflationary spiral crash because of the pandemic that cratered interest rates for good reason because no one was spending money. They needed to lower those rates to get people to start spending money. Inflation was practically zero and or negative at that point. What about the last time? Before that, we were where we are. 2008. What happened? The exact same thing. Deflationary spiral, massive meltdown crash, which halted inflation, took it essentially negative, gave the Fed the excuse to crash interest rates down to zero to, again, stimulate growth, stimulate spending. Let's look even further back, the internet bubble, right? What do all these have in common? A massive deflationary crash. Assets plummet. The Fed plummets those interest rates, tries to stimulate the economy because inflation's down to zero and they need people spending money again. That is exactly what Donald Trump wants to happen right now. So it looks like the only solution, unfortunately, is a massive deflationary crash to get these assets pumping again. Or the Federal Reserve steps in because something breaks. Let's say the bond market goes haywire, like a lot of people have been talking about. Jamie Dimon says the Fed may need to step in if the bond market keeps acting up. What could happen is the Federal Reserve steps in, starts buying up bonds to save some sort of issue with the bond market. That could also happen. In that situation, we wouldn't necessarily get a deflationary spiral crash. We would just have the Fed behind the scenes propping up the bond market, buying up bonds. That would be huge for the debasement of the currency, but they would still, even with that, that would cause a pump in all markets, right? Because that's massive stimulus, massive money printing. But what they still would need is this line to go to zero, and they really can't do that without a deflationary crash. This trend is undefeated since 2000. So most likely, I hate to say it, a crash is in store. We'll need some sort of meltdown to get that interest rate down. Again, Trump wants to fire the Federal Reserve because he needs that line coming down. So very interesting dynamics. Uranium miners will not move. The real estate market will not move. Any market will not move while rates are this high. So that explains price action. Let's look at fundamentals because ultimately this situation will be resolved and fundamentals, the highest quality assets on the planet, will skyrocket. So let's dive into the news of the week. What is going on with these uranium miners?
Italy will have to increase its LNG imports and also nuclear that we are trying to develop. I think there can be ways to work together. And the Italian enterprises will invest as they've been doing for many years. As you know, in the next years, I think around 10 billions. That shows how interconnected our economies are.
So we have the Prime Minister in the Oval Office talking to President Trump about how the two countries can collaborate on nuclear. Trump, we need to double the energy we currently have in the U.S. for AI. Promises emergency declaration for more power. Now, where is all that money going to go if we're trying to double our capacity in the U.S. for electricity? Again, it really doesn't get bigger than this when we talk about the future demand for uranium. New nuclear power could meet 10% of projected data center demand increase by 2035. So that's Deloitte saying a massive increase in nuclear power demand. Pentagon program could kickstart a new era of nuclear power. The Pentagon's Defense Innovation Unit has chosen a new slew of companies that are eligible to build small or micro reactors at Defense Department installations. The potential reactors could provide bases with reliable power in the event of a major attack on U.S. infrastructure or a power collapse due to a natural disaster. But the move could also lay the foundation for a micro reactor industry just getting started. With broad applications for the commercial world, small modular nuclear power is absolutely the future. U.S. government to ship enriched uranium to Oak Ridge Nuclear Fuel Plant, planning 400 jobs. A subsidiary of Amazon-backed X Energy will get uranium from the U.S. government to support a $300 million plant in Oak Ridge. The U.S. Department of Energy will ship specialized uranium to a nuclear fuel plant under construction in Oak Ridge, bridging a gap in the domestic supply chain for a company with plans to create hundreds of local jobs. The U.S. government has to bridge the gap. When you're wondering why uranium has not moved as much as you may think, it's because the U.S. government is filling the gap. There is a massive gap for uranium currently. The U.S. government is purchasing uranium primarily as part of a plan to reduce reliance on Russian uranium. So the supply is very tight. The U.S. government has to buy it, and they are the ones filling the gap right now, at least in this example. So it's being depleted. The demand is exponential. It's the future. Why haven't uranium stock prices gone up? Because there's no premium in anything. There's no premium in real estate prices. There's no premium in growth tech prices. There's zero premium or future growth priced in to uranium miners. Now, once interest rates come down, once liquidity is injected, that will happen. And the U.S. government is doing everything they possibly can to make that happen. So for now, it's a waiting game. We're going to have to stay on top of this space.